Rohr here with an early global view on Thursday, June 25th, 2015. It's currently 7 a.m. U.S. Central Time, and there have been quite a few macro factors this week, but on balance, the data's been mixed. If anything was a bit of a surprise, it was the German IFO coming in weaker than expected on Wednesday, but that could be written down to Greek concerns, which continue to bother the equities to some degree. So, what does all this mean to the markets as we await the continuing crunch on Greece? Closer and closer to deadlines everyone says are real this time as to whether Greece will have the money to pay the IMF loan that's due very shortly, or whether Greek might at least be in technical default, whether they are deemed to be fully in default by the IMF, which usually takes a little time. So we've got the hourly S&P 500 September future on the left, 30-minute on the right as usual. And it's been some very interesting developments, but all of today's review is going to be pretty concise because it conforms to the kind of levels and trend psychology we have discussed previous. For instance, the big news here as we go back to last Thursday was that the September contract, right as it was becoming front month, saw the S&P push back above 2096 to 2100. You have to remember, SEP was discounted by $8 to June, so this looked like a bit of an extended hurdle, but in the event, the market made it just fine, but it's still stalling up near to somewhat above the old 2119 failed up break from back in May that by late in May was already back below there and back under pressure that ultimately led, along with the Greek pressure, to tests of supports back into the 2075 to 78 area with some slippage. However, of late, after Thursday's euphoria, we get into the agony on Friday as it looks like no deal on Greece. Greece comes in with a revised proposal overnight, early Monday morning out of the weekend, and it's like, oh, maybe we have a deal. Deadline crunches, here we are back down, as you can see, right into 2100 to 2096. Now, this morning there's some hope that the full European Union, the full meeting this morning in Europe is going to yield the heads of state maybe furthering the process, so the market is actually up about 8 today at 2108. However, this is still right around the 2106 negated down break, this important Fibonacci retracement area. So whether it can proceed up further today is very important. And we will note also, last but not least, that on the indicators, it looks like the hourly and 30-minute MACDs are down around the lower runaway bands. Today's early positive activity will probably relieve some pressure there, but if this market should ever fail below 2096 in the near term, as in later today on further Greek fears, then the lower runaway band violation would tend to set up a psychology that would feed the weakness down into lower supports variously at 2090 to 88 and into the 2080 to 82 area. And of course, maybe even the bigger lower support down at 2078 to 75 again. And that pretty much does it for the short-term view of the S&P 500.